Hey, my name's James Nicholson and welcome to my YouTube video. I've got some good news for you if you want to buy a property. You see, house prices are likely to not go up at a rate higher than wage increases. What does that mean? Well, that means that affordability for house prices is likely to improve over the next 2 years. So in this video, I'm going to talk about how much house prices will go up, how many housing transactions do we expect to be done in 2024? Is that up, down, or sideways? I've got that data as well, and much, much more. So before we jump into this, as always, you know what I'm going to ask. Subscribe to the channel over there and hit the bell notification. We've got new content every single day for you guys. And that is where you're going to get the latest property news and all the stuff about investing in property that you could ever need. And while you're here, smash like, tickle like, do something to that like button. That really helps us with the YouTube algorithm. Just means you're a great person if you do it. It really helps me. So go on, give it a little smash over there. So this data is from Zoopla, and Zoopla do have really good stats. And so I think this is really worth to look at this data, and then you can form your own opinion. I'd love to have your thoughts and comments. So do comment on the video. I personally reply to every single video. So this is from Zoopla. And so what they're saying is that there's a lot of factors that are driving the market at the moment. And we've talked about these on the channel before, but I want to bring them back into the limelight so you can really understand what's going on and impact that will have on the property market. So the first thing they're saying is that's helping people get on the ladder is longer mortgages. Now, if you get a longer mortgage, you will pay significantly more in interest, right? Your payments, let's say you borrow 100 grand, if you borrow over 25 years, let's just say you pay 200 grand back, right? I'm not sure exactly what the numbers are, but if you borrow over 40 years, you might pay 280 grand back. It could be that much more and that much of a difference. And so banks want to offer these products. And why people are considering these is because it starts your monthly payments that much lower. Now, would I take one of these? Absolutely. And so the reason I would take and consider one of these longer mortgages and even talk about it to my daughters, Georgia and Amelie. Well, Amelie's 3, so she's not ready yet, but Georgia's 23. I would think that this, if it gets you on the property ladder and stops you paying rent, then it can be a good start because, yes, the mortgage might be 40 years, but here's the thing. In 10 years, you can just refinance and shorten it back down to 15, right? You don't have to continue with that. It's not likely that you would carry on with that mortgage for that 40-year period, but it would make the affordability there and you would be making some equity in that property as time went on. So people are doing that. And that is one thing that is keeping the market going. So you've got 40-year mortgages now. I bet you will start seeing 50-year mortgages in the next 5 years. And I also think that you'll get mortgages that go in for even longer than that. Not likely that you'll live long enough to pay it, but it's a mortgage that you could probably pass down to somebody. I think that's what banks will do. At the end of the day, banks want to lend you as much money as they can in a way that you can afford to pay it. So that is one thing that is definitely going to keep prices fairly stable, longer mortgages. Next, the fact is that wages are still rising. I think this is good. The Bank of England think this is bad. So wages are up 6% on average. Let me know if you had a pay rise, what it was in the comments below. You don't have to tell us how much, but let's roughly the percentage you got would be interesting to see. There's always people that are going to say, I didn't get a pay rise, but on average, people did. 6% was the average. And that really makes a difference to affordability. It's helping people catch up after all that inflation problem that we had over the last couple of years. So that will continue for a while. It's not going to suddenly drop to zero. And that's meaning that affordability is improving, right? So wages are going up at 6%. And the expectation is that house prices, according to Zoopla, this year will go up 3%, right? So that means the affordability is going to get a little bit better. Not only that, what else? will help with affordability is interest rates. So look, interest rates, we've said they're going to drop. They haven't dropped, but it's getting there. It's getting close. Central banks around the world have dropped. We need the Americans to do something really probably first, but you've seen the European central bank do it. You've seen the Canadians do it. You've seen the Swiss do it. You've seen other major central banks drop their rates. It's inevitable that it's going to happen here too at some point, probably in August. That's what we want. And that will be a big improvement for affordability as well. And so that will help people significantly with being able to buy a property, which is good. That's what we want. We want affordability to improve. Transactions. How many transactions are we expecting this year? Well, Zoopla is estimating 1.1 million properties will be sold, not millions, 1.1 million properties will be sold in 2024. Now, here's what's interesting. They're saying that already 75% of those transactions are going through or gone through, right? Meaning they're at some stage. Maybe they're at valuation, maybe they're waiting for all the legal stuff. And that kind of makes sense because it takes around 3 months to buy a property. We're roughly halfway through the year. So the transactions that are going to complete in the next 3 months should have started in some way. They should be in legals at some stage in there or in a chain or something like that. And it's just the real last quarter that we're waiting for. And I think that that transaction volume is about right. How much is that better than last year? Well, it's 10% up. And that will keep the market more stable than you think. In order for the market to crash significantly, house prices are down. Bigger house prices are down for sure. Lower end house prices are a lot more stable. But for the market to crash, what needs to happen is transactions need to halt. That's what happened in 2008. The banks stopped lending to people and then people just gave their keys back. They couldn't afford the properties. Those people struggled, couldn't get new mortgages, and all this sort of stuff happened. And so the market inevitably went down, right? And that isn't happening at the moment. The market is moving. The transactions are up 10% on last year. So it is interesting. A lot of people say housing is unaffordable, right? That is true, right? The only way that we're going to counter that is to build more properties. And Labour have promised that they're going to build over 1 million properties, 1.5 million, I think. Let's see if they somehow figure that out. I don't know where they're going to get all the builders, all the materials and all that stuff, but let's see if that happens. If that does happen, there'll be more affordable property on the market for sure. So in summary, what we're saying is affordability is going to improve. House prices are not expected to race away at crazy rates for the rest of this year. And Zoopla is saying by the end of 2024, they believe that because interest rates are going to drop, that house prices will be up around 3%. Let me know your thoughts in the comments. Do you think that's true or not? Do check out all the other content on the channel. Do smash like and go and check out this video right here.